Wall Street opened a new trading week with a cautious optimism. The market received a glimmer of a hope after comments by Fed policymakers. The market is anticipating the light at the end of the tunnel earlier than expected. The benchmark indexes perked up. Still, some headwinds dampen market sentiment. And the New York trade was turbulent on Monday. The major stock indexes closed in the green. The Dow Jones rebounded by 109 points, or 0.62%. The Nasdaq edged up by a modest 0.18%. The S&P 500 added 10 points, or 0.24%, to close at 4,409 points. The New York pre-market was more optimistic. The stock indexes extended their growth. The S&P is expected to trade in the intraday corridor between 4,390 and 4,450 points. Wall Street indexes closed in the green yesterday after heavy losses last week, and the growth was driven by comments by Fed's policymakers. They dropped a hint that the Federal Reserve might terminate its cycle of rate hikes soon, but advocated for more rate increases to bring inflation down to the target level of 2%. We will probably need a couple more rate hikes during this year to really bring inflation back to the 2% target, said San Francisco Fed President Mary Daly. She also added that while the risks of taking too little action are still higher than the risks of overdoing the rate hike, the Fed is approaching the final stage of its monetary tightening. Daly said she fully supported the policy decision in June, as well as a slower approach that allows for more extreme reliance on the data. We may end up doing less, and we may end up doing more. The data will tell us. Fed policymakers are expected to announce a rate hike at their meeting later this month, which will raise the funds rate to the 5.25% to 5.50% range. What's less clear is whether they will raise rates again at the September meeting, wait until November, or simply leave them unchanged and allow inflation to ease over time. We still have a lot of work to do, Fed Vice Chairman for Supervision Michael Barr said at a separate event Monday. I'll just speak for myself. I think we're close. Atlanta Fed President Raphael Bostic, speaking at another event on Monday, reiterated his view that the Fed could be tolerant on the rates and allow restrictive policies to bring inflation down without further action from the central bank. The Fed remains hawkish, commenting on a policy meeting last month. Cleveland Fed President Loretta Mester told reporters, "If it was just me, I would raise interest rates, but I understand why the decision was made not to move in June." A survey released on a Monday by the New York Fed on the consumer expectations in June showed short-term inflation expectations fell to the lowest level since April 2021. This may confirm the assumption that the price pressure will ease, which in turn may take some time, but the poll also showed a fifth straight month of expected house price growth, suggesting that house inflation could again be a problem for the Fed at some point. As for the corporate sector, Intel shares propelled the rally in the market with an increase of 2.8%, and semiconductor index grew by 2.1%. Small cap stocks also led the way at the opening of the week. Russell 2000 jumped by 1.6%, marking the best day in more than a month. Shares of Icahn Enterprises leapt by 20.2% after the investment firm said Carl Icahn and banks have nailed down amended loan agreements that separate the activist investor's personal loans from his firm's trading price. Citigroup on a Monday downgraded US stocks to neutral and said that the growth of mega-cap stocks is set for a pullback and recession risks in the United States may still be realistic. The pressure on the indexes was exerted on a Monday by mega-cap capitals. Shares of Apple, Microsoft and other heavyweights tumbled on Monday after Nasdaq said it was rebalancing its Nasdaq 100 index to address the over-concentration of the benchmark. The adjustment will be based on the shares outstanding as of July 3rd. Changes will be announced on July 14th and will be effective before the market opens on July 24th. The Nasdaq 100 includes the top 100 companies listed on the Nasdaq exchange. Changes in the index will force investment funds that track it to adjust their portfolios and sell shares of companies whose weight in the index is reduced. Apple fell by 1.1%, leaving its market capitalization of $2.967 trillion. Alphabet and Amazon dropped by over 2%, while Microsoft and Tesla lost over 1%. US stock indexes futures ended higher on a Tuesday, supported by lower inflation expectations, a pullback of mega caps, and belief that the end of the monetary tightening cycle is on the horizon. On the top of that, markets have also focused on the reports of a 4.2% drop in used car prices last month, the biggest drop since the pandemic began. The previous rise in the prices in this category worsened the recent surge in inflation. Fresh data released today showed US small businesses' confidence climbed to a 7-month high in June as the sentiment about the economic outlook eased sharply and sales expectations improved. Small businesses have recorded the least pessimistic outlook on the near-term economic outlook since February 2022, as the NFIB General Business Conditions Index rose by 10 points to a -40. US small businesses have had a net negative outlook on the business climate since December 2020. Sales expectations also slightly improved. A smaller percentage of business owners expect weaker sales in the next 3 months, pushing the overall sales forecast to its highest level in 4 months. In addition to business research, the bank sector is also in focus. The major Wall Street banks will open the reporting season this week, while the market is preparing to hear about the results and outlook for the sector. Fed Speaker Michael Barr outlined a massive plan to increase capital requirements for the largest US banks. The Fed's vice chairman for supervision said he plans to implement several regulatory initiatives that would require banks with more than $100 billion in assets to hold more reserve funds. Monday's remarks confirmed the industry's fears that it would stick to a wide range of tougher requirements as well as ignore their requests for easing in some areas. The banking industry has called these efforts misguided and likely to hinder lending. The changes he outlined do not take into account the negative effect of forcing banks of all sizes to hold more capital than is necessary to maintain safety and soundness. High capital requirements are costing the economy, and regulators have other regulatory tools in place, said the president and CEO of the American Bankers Association. Barr said he has no plans to revise the structure of US banking capital, didn't give a specific time frame for any changes, but they are expected to begin in the coming weeks. At the same time, most large banks have grown. Shares of JP Morgan Chase rose by 1.3% after Jefferies upgraded the stock to buy ahead of its earnings report later this week. Shares of Zions Bancorporated and Trust Financial lost more than 1% in lighter trading after Jefferies downgraded the bank's rating to hold. As for other stocks in the pre-market trading, most high-growth stocks such as Amazon, Alphabet, Apple and Meta rebounded slightly from a Monday's decline on the Nasdaq's rebalancing news. At the same time, trading may still be restrained today as investors are waiting for key inflation data on Wednesday, and the picture of the stock day has yet to be completed by New York Fed President John Williams. And the currency market is trading quietly today following a sell-off of dollars on Monday. Its index regained early losses, though it still retains weakness. The index was trading at about 101.90 before the opening bell. It's likely to trade in the intraday corridor between 101.50 and 102.10. The US dollar weakened to two-month lows today after Fed's policymakers signaled the end of the monetary tightening. Comments of the Fed speakers made on Monday pushed the US dollar to a two-month low of 101.67 against its rival currencies. At the same time, the Fed's officials did not give up the idea of further rate hikes. US interest rate expectations have been a key driver of the dollar since the Fed began its tightening cycle last year. Broader pressure on the US dollar is likely to intensify as the markets begin to anticipate Fed policy easing. Investors are now anticipating US consumer inflation data. At the same time, the market may get an additional reason for selling the dollar in the form of inflation data, since according to forecast, it will decrease significantly. The Canadian dollar is clearly benefiting from a weakness in its American counterpart. The USD CAD pair dipped by 0.13% intraday to trade at 1.3263, and the instrument is likely to trade in the intraday corridor between 1.3230 and 1.3290. In a contrast to the hints of the Fed speakers that the tightening cycle is coming to an end, the Bank of Canada is expected to take further steps towards raising the key rate this Wednesday. As you understand, against this background, the loonie will receive the main impetus for the trajectory tomorrow, but for now the asset continues to recover amid the soft US dollar and rising oil prices. Brent crude futures rose by 0.6% to $78.17 a barrel, while WTI added 0.8% to trade at $73.61. Supply cuts by top exporters Saudi Arabia and Russia scheduled for August supported both benchmark rates. In addition, the International Energy Agency insists that demand for oil from China and developing countries, combined with the recently announced supply cuts, is likely to keep the market tight in the second half of the year, despite the sluggishness of the global economy. The crypto market is trading steadily. Bitcoin is making efforts to settle above $30,500, though not very successfully. The token declined by 1.1% in the New York pre-market, trading at about 30,400, and popular altcoins are trading mixed today. The market is digesting mixed news. Among the latest are the hack and theft of $900,000 worth of NFTs from a Twitter account, and growing dissatisfaction with the auctions of the U.S. Securities and Exchange Commission. The Commission has approved the Grayscale Bitcoin Futures ETF, adding it to the list of approved products along with the leveraged ETF and the short Bitcoin ETF. The decision sparked controversy over the Commission's stance on a Bitcoin spot ETFs, which carry less risk. Ripple Lowers has accused the chairman Gary Gensler of being a bad regulator compared to his predecessor Joe Clinton. Besides, Andrew Bailey, the governor of the Bank of England, reaffirmed his stance against cryptocurrencies during his recent speech. Bailey said on Monday that Bitcoin has no intrinsic value and is very volatile. He also noted that cryptocurrencies such as Bitcoin are best viewed as a highly speculative instrument. In addition, Bailey said that stable coins like Tether and USD coin are unreliable and do not meet the standards that the regulator expects from a safe money in the financial system. As for Bitcoin's intraday outlook, if the token manages to hold above 30,300, it will again reach the highs of $30,500 and 31,000. On the other hand, a drop below 30,300 could enable a fall to 30,000 and $29,650. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you online tomorrow.